Listen only mode.
Hey guys, good morning. Todd here with tradinganalysis.com and just chatting with Tony Lindsay here from MotiveWave. And Tony is continuing to push through the new beta version. You guys should have access to the beta version 5 of MotiveWave. And how's it going so far, Tony?
It's going pretty good. We put a beta 2 out, I guess it was on late Friday. We're going to put a beta 3 out, I think, in the next day or so as well. Just getting some good feedback from everybody. And thanks everybody for reporting, all the bugs and stuff. We are working really hard to get everything fixed. So beta 3 should have some more fixes out there. I know we are having a particular problem with older versions of the Mac, Yosemite and earlier. Apparently the menu bar items are grayed out, so we're trying hard to look into that one. The problem we're running into is getting access to a Yosemite-based machine, which is a little harder than we thought. So working on that, and hopefully we'll get you guys an update out in a couple days.
Okay, awesome. Yeah, I noticed that up there. No big deal, but working smoothly on my end and enjoying it. So hopefully you guys, if you have any feedback, let us know. And those guys are always at MotiveWave. They're always open to take your feedback. They work great with the end user, so we appreciate that. But that's great, Tony. We'll hop in if anything, if you see anything pop up, and appreciate your hard work.
Okay.
All right. Thanks. That was Tony from MotiveWave. And we're doing our Wednesday webinar as we do every week. And this thing is getting more popular, so I appreciate the feedback. And we're posting it up on YouTube. I get it up there almost within a couple hours after we post this up. I put it up on my site, right on YouTube and stuff like that. And those are getting some pretty good views after. So I know a lot of you guys can't be here. So if you're watching on the recording, you can count on these. 2 weeks ago, it wasn't put up because I forgot to hit the damn record button. But we're recording right now. So we're good. So let's kind of dive in here a little bit. Yesterday was a nice sell-off day. And kind of the thing that keeps me up at night is this structure right here. And if you have chart patterns keeping you up at night, you're a real loser. But that's all right. I'm happy to be a loser. The NASDAQ, the S&P, and the Russell are all really tracing these three-wave movements. And this is the daily chart. And, generally, if you have a strong uptrend on your hands, you should be looking at wave structures that unfold like that, as in 5-wave moves. And I don't really see that here. Okay. I see a big push up, a correction, a decent move up. And now we're starting to get the selling. And this daily bar won't show up until today's price action starts in 25 minutes. But we did break uptrend support here. So NASDAQ closed at 48.22, which is through uptrend support. Technology has been leading. And yesterday it really kind of gave it up. So that was interesting. On top of that, if we get into some of the fib here, if you look at the distance traveled in A compared to the distance traveled in C, a 100% fib projection puts you at 4916, which is basically the high. All right. So that's what we call a Fibonacci projection. You also have a external retracement C versus B at the 1618 level. So if you take a full retracement of B, okay, and all you're doing here is with these extension levels, you're doing nothing more than a retracement of B. All right. So you start up here, you go down here. There's the 618 retracement of the drop in B. There's the 786 retracement of the drop in B. And generally what happens is when you break through the 786 retracement, you go through the 100%, this is the definitive line between retracement and extension. You'll usually extend up to the 1272, which is here. And this one even got up as far as the 161%. So this is the 161% extension of B, the 100% projection of C. And these are two very specific kinds of fib studies. Together, they form a nice zone. I won't get into the same detail, but we have a nice clustering of Fibonacci time up here as well. So you have price coming together with time, and it's starting to behave. So as we get off the daily, go down to the 3-hour chart. This has the price action filled in from yesterday where the daily chart does not. For some reason, IQ feed just doesn't show you the data, yesterday's daily bar and today until today opens up. It's kind of weird, but that's just the way it is. So we did break through this uptrend support that is sourced off the low from February 2016. Actually, it's January 2016. So we did break uptrend support. So, if we have more follow through in the downside today, this is the end. This is the potentially the start of a pretty significant down move. If you shift over to the S&P, whereas this C wave did a 100% Fibonacci projection compared to A, and the S&P, which has been a weaker index because technology has been leading us up over the last month or two, the S&P only went into a 618 projection of C versus A. So whereas the NASDAQ made it all the way up to the 100%, which equivalent would be 2322, S&P only made the 618. Okay. On top of that, we have the 1272 external retracement of B up in C. So this guy has held this little zone of fib resistance fairly well. Actually, no, sorry, that's a bigger 1272. Here's the 1618, excuse me. This is the 1618 extension of B compared to C. So we got 1618 and 618, 2190 area that has capped the S&P, and we've begun to back away. Like the NASDAQ, we have broken up trend support in the S&P, and it looks like we have the potential to fall pretty significantly. Okay, this is a very delicate rally that we've been on. Yesterday's loss of leadership in tech, I think, was key. We have shorts. We're carrying, I think, about 6 short positions and 1 long position. I'll take you through our positions. And as I said, the loss in tech yesterday, I think, was key. And if we can continue to get follow through today, it could be another bloodbath. We have Fed minutes at 2:00 today. There are now 3 dissenters on there, so there's some dissension among the ranks here in the Fed in terms of a Fed rate hike, and you're starting to see the futures begin to roll over here. So it could be another selling day. Okay, let's see. From there, key market will be the bonds. Bonds are selling off here into a Fed rate hike, but keep in mind that a lot of people just chalk up the movement in the 10 and 30-year bonds as reflective of where the Fed's going. And that's not really the case. The Fed controls the shorter treasuries like 2 years here. The 10s and 30s are more left in the hands of market forces, a little bit less reflective of Fed policy. But if you look at the 2-year, the 2-year is dropping. We are pressing the lows, meaning bonds are going down, rates are beginning to move up, but we're not all out breaking down here. So if we just do a retracement off the lows, the 786 retracement is still a ways away here. And then if you do a little projection from here, you're going to see a quality. Let me just do this here. Fib. We're going to do, what am I going to do? Expansion. Okay. And let's see where support in the 2-year would come in. All right, so I'm just looking for the 100%. There's 618, there's 786, there's 100. So the 100% is actually right here. Okay, so there's going to be a little bit of support here in the 2 years into 108.29 and 108 and 29 30 seconds and 108 and 26 30 seconds. So if you're watching those 2-year treasuries, watch for support down there. And if you start to see a bounce here from this zone, that's very much expected because that's a pretty deep fib support area. Longer term bonds up in the 30s. I am tracking a decent 5-wave decline. So it's, again, not so reflective of Fed policy. I think foreign central banks are starting to sell our bonds and pushing up our interest rates rather than these moving lower because of Fed policy. But that's okay. Doesn't really matter why it's happening. So we do have a little bit of support here in the 30-year bonds down into the 162.5 area. So watch for support from there. We will try to take a counter trend trade in the bonds against that support level right there. We are short Newmont. Gold is breaking down here ahead of a potential Fed rate hike. So let me just go over here to the gold market. You guys are quiet today. You guys are normally hammering me with questions unless my questions aren't working. Are you guys alive? Normally you just get right after me with questions. Somebody type something to let me. Okay, there we go. You guys are the quietest I think you've ever been. Scott says shake that flu. Yeah. Hi, guys. Thanks, boy. I'm beginning to feel like I'm talking to myself. Renee, you need more coffee or I need more coffee? I got one right here. Normally you guys come in and just start like machine gunning me with questions. You guys are super quiet today. Maybe you're just dialed in. Maybe you're just focused. And I shouldn't get in the way of your flow. All right. Appreciate that. It's just my insecurities. I need to know you guys are listening. Okay, so gold. Command down. Where's my wave count? There we go. So gold, kind of the same conversation we just had. Gold off the lows on the daily here really looks like a big old messy 3-wave move, right? 1, 2, 3. Really doesn't look like a 5-wave move at all. And when that is the case, that usually tells you are still in a downtrend here. And gold has been declining for a long period of time. We did a 3-wave move up, and now we're starting to break down here a little bit. Okay. This little study is interesting. So this is what they call overbalance. And my good friend Bob Miner kind of brought this to our attention. When you have a correction that's been bigger than any of the prior corrections, that tends to signal a price change. And what I mean by that is if you take the distance of this correction right here, 100% is at 1285. Okay. So if I'm projecting distance traveled here compared to distance traveled here, 100% is 1285. We've exceeded that and we're down to the 1272. So now we have a situation which is called overbalance. And that starts to signify that this correction is of a larger degree than this correction. Okay. Or what said differently, this move lower is of a larger degree than this correction. So basically what that means is we're probably moving lower in this X wave right here, not this B wave. All that tells you is this is a 3-wave move and the top is likely in and gold is very likely to decline. Okay. So all I'm focused on is the 1272, 1618, and 200% of this drop. Also, those are little fib projections of W and Y. And then I just want to do a little fib retracement of this move up. The only thing I'm worried about is 786. That's the line in the sand. 1237 is key in the gold futures. If you break 1237 half today, you're probably going down much lower. And there's a lot of extra fib in here we don't need. To the 1272, 1158. That's going to be a big focus. I am short Newmont with our research customers ahead of time. And if we can break 1235 area here, then we should be able to break on down to 1150. And that's going to be a pretty good trade. So Newmont, we just put that trade on. Let me show you what's going on in NEM. Let's see. NEM. Okay. So just kind of hanging out here in Newmont. I'm thinking this is a little 4th wave here within this degree, this decline right here. 1, 2, 3, just a little resistance right there. We've got the minor power wave sell level here using a 500 period look back. And that's going to offer resistance right there. It's also the 100% relationship of wave 4 versus 2. So a little bit of resistance up there, and we should be able to slide on down there and Newmont in wave 5. Dollar is starting to wake up here a little bit. We'll see if the Fed has the backbone to carry through with this. I think the Fed is it's the same game. You know, they talk tough, raise rates as stock markets are on the all-time high, dollar rallies up, and then as soon as the stock market begins to back away, they're like, oh, just kidding, we're not raising rates. We want to keep volatility as smooth as possible heading into the election. I believe they're very much a politically controlled organization at this point. They have no excuse not to raise rates. And at the last meeting, they had no excuse. You know, Janet Yellen was asked, what is the reason you're not raising rates? And she had no answer. She couldn't just say because we want to keep the Democratic Party in office. So it's a politically controlled body. It's crazy, but that's just the way it is. So stocks at all-time highs, and they can't manage to raise more than 1/4 point over a 2-year basis. It's insane. So the dollar's beginning to rally. We'll see if the Fed has the backbone to go through with a Fed rate hike after the election. There's no way they're doing it before the election. So I think we're up at like a 68% chance that they'll raise rates. Dollar's coming off of a long-term consolidation from March, and we have the possibility to begin to move higher here. So if this is in fact the wave count, we'd expect to get a 1.618 relationship of wave 1 versus 3. And that's going to be at 98.08. So that's going to be at current levels. So the dollar has certainly begun to take shape of a move up. Let's just see if the Fed has the backbone to go through with it or not. Crude oil. We put a crude oil position on with our research customers yesterday. Oh, see, I got to be careful what I ask for. You guys are hammering me with questions now. That's awesome. Okay. So what's going on with the with crude? Let me just, while this thing's coming up, we put on a position yesterday. We did a little bit of a put butterfly. We've been talking about this a lot with our research customers. This is kind of a fun trade here. Let me just go out to the daily and show you what's going on. Crude oil is, this is USO overlaid in purple. Let me just push him off to the side. Okay. So crude oil is potentially breaking out. All right. I'm giving this thing the benefit of the doubt. Say this is going to be a third wave rally. I'm very much ready to abandon this. I'm going to consider this to be 1 or A, 2 or B, and 3 or C. We're starting to hold some fib resistance up here. So all I'm going to focus on is the move up from September 16th. I think we're falling into a little bit of a fourth wave here off the daily. Let's go down to the 3-hour chart. And I have USA overlaid. Let me just shrink him up for a second. So crude oil is moving up. The deal here is, obviously, we've got supply cuts from oil-producing nations, which is going to boost up the price. But you have the dollar rallying ahead of Fed rate hikes and the stock market falling out of bed. Those two intermarket forces will work against crude oil rallying. So the thought is the fundamental supply of oil is dropping, and that should support the price. But the dollar's rallying, stocks are falling. Those two things will act as headwinds to the crude oil rally. When you combine that with the Elliott Wave count, that shows we should be moving into a fourth wave here. This is the ideal price and time zone for a wave 4 completion here in the crude oil market. It's going to be between October 17th and October 19th, between $48.50 and $49.90. Okay, so it looks like we're falling into a little bit of a fourth wave consolidation. So the trade we put on with customers yesterday is we put on a put butterfly in this fourth wave. So let me just bring this over here. That's my new mop position. Here's crude. So I had to do it in the USO. I tried to do it in the crude futures, in the options market, but there really wasn't enough expirations to do this. So we went out to the 21 OC options, the monthly options, and we did 11 and a half, 12 put butterfly. Okay, so we just put it on yesterday. It took me a while to get filled with that, but altogether, I think we did this for about 16 cents. And as we go over to the position here, there we go. Why is that looking funky right there? That P&L is not right there. Anyways, I'm focused on the blue line here. The body of the butterfly, 11 and a half. That's going to be max profit at 1,000. Max loss will be 480 and 480 on either side. I got to look at that. Does not this daily P&L doesn't look right, but I'll have to check into that here in a sec. So body of the butterfly, 11 and a half in USO, and as I sync this back up here, this USO with crude oil. I just want to do it. Let me do it automatically. There we go. So as we look over here, if we can kind of settle in between 11, I'm looking on the left scale here, 1140, 1120 area, we should be able to extract some profits on this kind of range bound setup coming in crude. So we're not going to hold this thing through to completion. We're going to manage it at either 50% or a third and begin to move out of this thing if we can just kind of get some positive theta decay out of that put butterfly in crude. Okay. So that's a pretty good macro look with 10 minutes to go. That's not bad. I'll take you through some of the positions that we're in with our customers. We do have Lowe's working. This is a Lowe's has been getting kind of crushed from the move up in interest rates, which is hurting housing. So it looks like we have a good 5-wave decline going here. If we do ratio analysis 2v1, or sorry, a ratio analysis 3v1. Okay, we're already through the 2618. We should be able to get down to the 4236 down here. A little 5-wave move to go. And if we just kind of get down ratio analysis, and we can begin to build a zone of where lows can go. We're just going to get down the wave 5 list as we always do. And I'll do one more wave 5 study. Pin, and then ratio analysis. I'm just doing all the wave 5 studies. So we should be able to get down in lows from 68 down to about 65. In the lows position, what do we have working? LOW, we have the 70, 67 half put spread in the November monthlies, the Nov monthlies. So we're trying to get down to that 67 half short strike, and that's going to coincide with this fib support zone down here right around 67 and a half. So that trade's doing fine. What else are we working here? Let me just take a look at our trade desk. Oh, I closed the trade desk. Never mind. Yeah, never mind. Okay, that's fine. All right, so let me kind of turn it over to you guys. What symbols do you want me to take a look at? What questions you guys have? That's just a quick rundown here of what we're doing. Let me just show you as you guys are typing that in. Let's just take a look at this trade desk. Oh, the other thing is I will be on CNBC Fast Money today at 5:30 doing the technicals from Times Square. So if you guys are watching, I'll be on today. Trade desk. USO, there's that put butterfly we mentioned. I am short healthcare. I put on a 70-68 put spread with customers. We pay 52 cents for that, and that's in the Nov monthlies. We're short CVS. That guy's been really weak with the move down in consumer staples. Newmont, we talked about that. Lowe's, I showed you that one. Starbucks, I think, is on the brink of collapse. It's been underperforming for a long period of time. And let me go back to MotiveWave. Here we go. Okay. There's Starbucks. So coming out of a triangle here, looks like a little bit of A, triangle B, and then trying to move down here in wave 3. Starbucks is just hanging on by a thread around this 52 mark. So it looks like we're going to try to get down and try to tag the major power wave sell level using the 200 period look back right there. So if we just do a little fib projection of 3V1, it's going to be right below the 100%. So we're going to try to get down to the 51 to 49.80 area here in Starbucks. For some reason, I don't know what the fundamentals are, don't really care, but the stock has just been underperforming for a long period of time and is just kind of begging to jump off the 52 cliff. Okay. Miguel, you don't need to put S&P 500 8 times, especially because we opened with that one. We talked about that a bunch. Tesla, Alex, sure. Tesla. Haven't been tracking Tesla. I don't like the way it's trading just because it's been so range bound for 2 years now. Up in the weekly, let me see here. Oops, let me see here. Just nothing to do yet. It can resume the uptrend. It looks like 3 waves down. Let me get off the weekly, go down to a daily. Yeah, just nothing to do there yet. A, B, C. You know what? That's probably a triangle in Tesla. Decomposed triangle, yeah. I would say one more leg down in Tesla to complete that A, triangle B, C correction. Ratio analysis, C and A. Yeah, 182 to 164. Looks like we want to go lower in Tesla. Like that. Okay. Netflix, yep. Netflix actually, I think it's moving into a pretty good buy zone. I worked this up in a webinar last night. We did a fib webinar last night. And Netflix did break out, but is pulling back. And let's kind of take a look here. Where's my power waves? Let's change that to 200. Update. There we go. Okay. All right. So it's possible that Netflix broke out finally. All right. So we have a long triangle as soon as MotiveWave pulls in the data here. It's been going on for a while. Looks like we're going up in 1, set back in 2, and now seem to be rallying up in wave 3. So let's stretch wave 3 out and give us some room to work here. So the 161% would be the ideal wave 3. So what you do is a fib projection of wave 1 up from 2. 161 is your textbook stopping distance. So everything in here is going to be the subdivision of wave 3. Okay, wave 3, just like wave 1 and 5, will be a 5-wave move just like that. Okay, so it looks like we've moved up, and I'm actually interested in this one today. I got to tell you, Netflix is my worst performing stock this year. I've lost money in Netflix, and in fact, I haven't. It's my worst stock this year. Looking at my P&L, so just keep that in mind. But it's also been super range bound for a long period of time. But we might be coming out of it, so just keep that in mind. Apply. Okay, so as we pull back here in wave 2, the minor power wave buy level is 103.14. The majors at 97.40. That's a pretty good zone there, 98.28 to 96.04 with the major buy wave right in the middle. So I think Netflix would be worth a scoop against a very oversold stock market. If you start to see the stock market bounce today, you could get involved in Netflix, and you don't need to put stops much below, say, 95.85, just below the 786. So if you could get a test down into that zone, I think that's a pretty good scoop in Netflix against a very oversold stock market. But if the stock market continues to get crushed today, then nothing's going to save it. But if you can get the NASDAQ to begin to agree, that could be a good scoop in Netflix, something I'll probably try despite my poor track record in Netflix this year. Okay. Roseanne says dollar and gold are usually inverse, but are going up together now, all right, let's take a look at that one. We'll get 2 minutes. It's always fun tracking those correlations, Roseanne. Yeah, sometimes they trade together, sometimes they don't. Get out of here. So I'm just going to do GLD and UUP just to keep it simple, if that's okay. So here's GLD, and let me just add instrument overlay. Let me throw UUP on top of it, which is that dollar ETF. And let's see what's going on. Make it green, create. Okay. So dollar's moving up, gold's moving down, I would say. I'd say they're going kind of together, right? Or they're going inverse. I'd say the dollar's rallying up, gold's breaking down. I would say the gold market looks like the dollar's a little stronger, I would say, because, well, not really. And tell you what, let me flip the dollar upside down. It makes it easier to compare. So now we're looking at upside down dollar. I would say they're trading pretty well together. Looks like gold bottomed first, then the dollar topped. Remember, I just made this chart upside down. This dollar topped over here, trading together. I would say the correlation is doing okay. They were a little bit of an inverse relationship here. Or sorry, I should say direct, because I flipped the dollar upside down. They kind of went together in here. Remember, if you uninvert it, okay, they kind of traded together in here, but then looks like they're back to trading inverse to one another. So I would say they're together. John, okay, so good question there, John. I'll answer that one for you. Netflix. Why do the power wave buys and sells overlap? So I'll talk to you quick about this one. And let me show both the buy and sell levels. So the way this works is for the buy levels, okay? So for the green levels, so we're in an uptrend because the DMI oscillator is in an uptrend. The buy levels are going to be calculated off the most recent swing wave high, which is going to be this purple dot right here. So it's going to take all the corrective swings against an uptrend, calculate a minor buy level, which is the thin green, and a major buy off the thick green. So those buy levels are projected off the most recent swing wave high right there. The sell levels are calculated off, in the case of an uptrend, the lowest price right here. Okay, it's off the lowest price. So these are the major sell levels right here. So the reason they overlap is because they're being projected off different points. Okay, hopefully that makes sense. All right. So let's just take a look at the open. So we're very flat here in the open. S&P, NAS, and RUT all up less than 0.1%, starting to give it up here a little bit. Bonds down a touch. Dollar up another 0.25%. Crude down 50 cents. And the dollar's flat. So pretty quiet open here. I think those 2 p.m. minutes are going to be interesting here in the open. Let me just see if bonds are moving into that support zone yet. Okay. Yep. All right, guys, we'll leave it there. Hopefully that helps. I know I threw a lot at you, but it is a busy market. And if you guys would like to take a trial, if you guys want to get in and get all the member commentary, text messages, just go to tradinganalysis.com. And then normally off the website, I think they're going to charge you $47 for a trial, $47 for all access 30-day trial. But if you go to, and there's a little preview video here about what you get. But if you go to tradinganalysis.com and just type in MotiveWave, MotiveWate, that will direct you to a discounted $7 link for the 30-day trial. Okay, that'll get you everything for 1 month. It will auto renew after that, and you'll be able to hang out with us and see all our trades for a month and join the family and trade this busy breakdown that I think is coming. All right, so guys, we'll leave it there, and we will see you on Fast Money tonight. If you're watching, if not, I'll see you in the members area here a little bit at tradinganalysis.com. Thanks to Tony and MotiveWave. They're doing a great job with version 5. And happy election season, guys. Talk to you soon.